taxation system. The most important part of the taxation system is GST. Goods and services tax is the most important part of the taxation system. At present, which is the highest source of tax collection for government of India? From which source government gets the highest tax? One, I can tell GST. Second one is that corporate tax, the taxes paid by the high profit making companies like Reliance, Adani, Ambani, Tata, Birla, their profits. Third is the income tax of the middle class people, common people's income tax, which will be the highest tax collection source for government of India. GST. Till 2022, it was corporate tax. After in 2022, first time GST became the highest source of tax collection. 28.5% of the total tax collected by government of India comes from GST. Corporate tax is second. 28.1% is the out of the total tax collected by government. 28.1% comes from corporate tax. Corporate tax means the profit, whatever profit made by corporate companies, they have to pay 30% of the profit as taxation. Third one is income tax, and the common people's income tax. Still 26.3% of the total tax collected by government comes from income tax. Next one, service tax. See, tax on service was a discussion in the Constituent Assembly of India. Coming to the service tax, and you can do one thing, you can listen to the class first and material you can revise after going home. If there is anything, especially for you, if anything you did not understand, you can come to me in the office. I will be there after 9, and after 9 up to 4 I am free, and you can call and come, I can explain. Otherwise, you can ask in the class, then everybody can benefit out of that. And you first listen and try to understand, because in the material, sometimes what I'm discussing will be up and down. Then your focus will be going to the word to find out in the material. Then you take a story and you try to listen and understand first, then you can go, because all the points I'm discussing, it will be there in the material. In your material, something extra will be there. Others material, it will be almost fit. Coming to the point, what was the thing? Tax on services. When we got independence, in the Constituent Assembly, there was a discussion that the service tax, which government will collect, whether central government or state government. When the discussion came up, somebody made an opinion that what service we will charge a tax. 1947 to 1950, that 1950 era, you think, which were the famous services in India? Services, one was hair cutting service. One person was sitting on the roadside with a chair and taking some 2 rupees or 1 rupee for one hair cutting. Is it a genuine thing, government charging a tax on that service? No. Some people were doing the dhobi service, washing the dress and ironing the dress. Other was some small rickshaw pullers transporting the people from here to here. These were the major services. Whether there was any IT service, Facebook service, Instagram service was not there, and the IT service was not there. Then these were the, and when some wedding parties there, some people are making decoration services. This way, some small services were there. Then Constituent Assembly decided that we don't need to charge any tax on services. No tax on services. But when we reached 1991, then from independence till 1994, and services had no tax, only goods had the taxation. But when we reached 1994, services became a key sector in the economy. The people who are cutting the hair for 2 rupees, 10 rupees, 20 rupees, and they converted their saloon into beauty parlors, and were, and in a modern beauty parlor in this line, what is the charge of hair cutting for the girls? If you want to do a proper straight, not cutting now, it is straightening the hair and coloring the hair, everything. If you go to make up your hair, how much will be the cost? Some 3,000, 4,000, I think. Yes or not? Yes or not? Almost near to that, minimum 1,000, 2,000 will come. And the person sitting there, he will do the counseling. If you do this way, if you make this color, and he will sometimes disappoint you that, and your hair has some white color is coming, you must do the coloring. And multiple motivation will be given. some 2,000, 3,000 will go. For the boys, how much you spend? 60 rupees, 100 rupees, 150 rupees. And again, the same same hair cutting salon. After the hair cutting, they will ask you that, do you want to go for some facial or cleanup, bleaching? Multiple terms are there. 600 rupees, 500 rupees, 1,000 rupees, 2,000 rupees, 3,000 rupees. Anyway, it became a big service sector business. Barber shops or the hair cutting salon should not have the tax, but the modern beauty parlor, if they are getting a bridal makeup, goes up to 15,000, 20,000 is the charge. Then 1991, when Manmohan Singh came into power as the finance minister of India, he told that services we have to charge a tax. That became a highly booming service. From the normal level and rickshaw puller service, it became a taxi service. And again, aircraft services, going from one location to another location, IT services, tourism services, and making tourist packages, health sector services. Private hospitals are making the health sector services, high quality modern education services. Then government thought that service sector has to be taxed. In Indian Constitution, we have 3 lists in the 7th schedule. List number 1 is union list, state list, and concurrent list. Service tax was not in any of the list. If one item is not in any one of the list, there is a power for central government called as residuary powers. Using residuary powers, that item can be brought under central government's decision. Then service sector, using residuary powers, was brought under the central government. In 1994, first we introduced the service tax in India. Now it has been merged with GST. Most of the services at present, first introduced in 1994, now merged with GST. It was not mentioned in the Constitution of India. Then using residuary powers, it was first introduced by central government. Coming to goods and services tax, GST. GST was first introduced in July 1, 2017. For introduction of GST, we passed an amendment act into Constitution, that is 101st Amendment Act 2016, because it was required to make an amendment into the Constitution of India because it deletes earlier existing taxes in the Constitution. In the Constitution, there were a lot of taxes listed in the 7th schedule, and it will be for concurrent list or state list, union list. All those items have to be deleted, and a new constitutional authority was added under Article 279A. Under Article 279A, a new constitutional authority, GST Council, was added into Constitution. Adding something into Constitution, deleting something from Constitution needs a Constitutional Amendment Act. Now, in polity, have you taken polity class? In polity, you must have studied that 3 types of amendments are there. Amendment with simple majority. Simple majority means more than half of the members present in the house and voting. Formation of a new state under Article 3 can be done. That amendment can be done by simple majority of the parliament. Another type of amendment can be passed by special majority of Lok Sabha and Rajya Sabha sitting separately. Joint sitting is not permitted, but in Lok Sabha also the act should be passed by special majority. In Rajya Sabha also the act should be passed by special majority. What is special majority? Special majority means that minimum 2/3 of the members present and voting. That 2/3 should not be less than half of the total membership of the house. Minimum half of the total members should be there. Again, one more condition is there. Some members might be absent today. That there should be support of more than half of total members of the house. In Lok Sabha, we have 543 members. More than half of the 543 should support it. Now, out of 543, imagine only 450 came today. Out of this 450, 2/3 should support it. 2/3 means that 300. Then if 450 people came, 300 people support should be there for the bill, then the bill will be passed by special majority. Certain other amendment acts are there, which is related to states, that is federal matters. If an amendment is done to a matter related to center and the states also, then the act has to be passed by Lok Sabha and Rajya Sabha by special majority. Again, the act has to be passed by half of the state legislative assemblies by simple majority. The bill has to be first passed by Lok Sabha and Rajya Sabha by special majority. Then the copy of the bill will be sent to all state legislative assemblies. Now, among the state legislative assemblies, minimum half of them should again pass it with simple majority. Whether GST is a matter affecting states? Yes, because earlier states were collecting state sales tax, state excise duty, all the taxes collected by the states have been abolished now, brought under a GST, then it is affecting the power of the states. Then 2016 December, the Parliament of India passed it. Lok Sabha and Rajya Sabha passed it. Then it was sent to all state legislative assemblies. By July 2017, more than half of the state legislative assemblies also approved it. Then we implemented that, which was the first state legislative assembly to pass the GST bill. Assam State Legislative Assembly was the first to pass the GST 101st Amendment Act of Indian Constitution. Then it was introduced by 101st Amendment Act of Indian Constitution. What is GST? GST is a multi-point sales tax with set off for the tax paid on inputs. Let me give you a brief on how was the taxation system in India? What were the problem of taxation system in India before we introduced GST? Before GST, imagine you want to purchase a car. Then the car manufacturing company, they have to, it's not a car anyway, and the car manufacturing company, and they have to manufacture a car. For manufacturing the car, they need to purchase lot of raw materials. They will purchase the iron, and they will purchase the leather and plastic items. They will purchase the tire and different items they will purchase. When they are purchasing all these items, they need to pay the tax. Tire company will not give the tire without paying the tax. They will purchase the tire by paying the tax, tire amount plus tax. Because tire company cannot see that whether tire is purchased by an individual or a company. Everybody, they will sell with their tax only. For iron, they are purchasing by paying a tax. Then all the raw materials they are purchasing and they pay the tax. Total cost of manufacturing the car was, for example, 4 lakh rupees. Out of that, the company tells that 3.5 lakh was the total cost of raw material and the manufacturing labor cost and everything. 50,000 rupees was the tax paid on the raw materials. Then for company, how much was the total expenditure for the car? 4 lakh rupees. Company tells that our total value of the car, including the labor charge and the raw material, everything is 4 lakh rupees. We manufactured a car. Your company will add a profit. They added 2 lakh rupees extra profit while selling this car, and the car is available in the market for 6 lakh rupees. When the car goes to the showroom from the factory for 6 lakh rupees, in the showroom, government tells that you must add, for example, 20% tax while selling to a customer. Then on 6 lakh, 20% tax is added. 20% tax means 10% is 60,000, 20% is 1.2 lakh. Then the total cost of the car becomes 7.2 lakh rupees. Now see here what happened. And the 7.2, 1.2 lakh rupees is the tax for the car. But one thing is there, this tax has a problem. Already 50,000 rupees is paid by the manufacturing company as a tax for raw material. Including that 50,000 is the 4 lakh of value of the car. Into that 4 lakh, 2 lakh profit got added. That means this 6 lakh includes earlier tax paid. On that 6 lakh, again 20% tax. That means on tax on tax. Whatever tax already paid, on that again the tax is added. Yes or not? 6 lakh means includes earlier paid tax on the raw materials of 50,000. This is called as tax on tax or cascading effect of tax. Tax on tax or the cascading effect of tax. Now, one intention of introducing GST was to abolish this system of tax on tax. Only one tax for the people. Now, when GST comes, what government will do? Government will ask the company, what is your manufacturing cost? They will tell 3.5 lakh rupees. Now, into the 3.5 lakh rupees, how much you paid the tax? And they will report, we have paid 50,000 rupees as a tax. Then our cost is total 4 lakh. Government will ask this company, you take your cost as 3.5 lakh only. Into that 3.5 lakh, they will add a profit of 2 lakh. Then car's value becomes 5.5 lakh rupees is the value of the car. And on this and plus anyway, you have already paid a tax on this one and the tax you keep it now. 5.5 lakh rupees is the total cost of the car. Into that, you add some 20% tax. Adding 20% tax into 5.5 lakh rupees, 5.5 lakh, 55,000 is 10%, 20% means 1.1 lakh rupees will be the total tax. Then the cost of the car becomes 6.6 lakh rupees. But the car company will tell that who will give us this 50,000? Then government tells that when you collect 1.15 lakh tax from the customer, you take first your 50,000, remaining 60,000 you can pay to government of India. Already you paid 50,000 and 60,000 they are paying now. Government gets 1.1 lakh rupees tax. Yes or not? Customer also pays how much? 1.1 lakh rupees tax. Yes or not? You understood now? Earlier system was that this money will be added into the value of the car, this tax paid. Then 3.5 lakh rupees, 3.5 lakh rupees plus 50,000, 4 lakh was taken as the cost of the car. Into that 4 lakh, 2 lakh profit was added, 6 lakh. On that 6 lakh, 20%, then car's value became from 6 lakh, 7.2 lakh. 7.2 lakh. How much tax is paid by customer? 1.2 lakh is paid by customer, but government got how much tax? 1.2 lakh here and 50,000 tax here. 1.7 lakh tax on tax government was charging. Earlier government was taking 1.7 lakh rupees tax from a car. Now government exactly takes whatever the tax has to be collected. Customer paid 1.1 and government also took 60,000 from the showroom and 50,000 on the tax of the raw materials. Government also got 1.1 lakh. That means GST removes the cascading effect of tax. GST removes the tax on tax. Then after GST, the price is supposed to reduce or increase? Reduce. But did you experience it? No. Why? Prices were supposed to reduce, but government increased the tax rate. Before GST, when you purchase a car, including all different taxes, 23% was the tax rate coming. After GST and the purchasing a vehicle, government has added a 28% GST bracket. Then means the earlier rate of tax was kept as same, then cars price must have been reduced, but government increased the tax rate under GST. That is why we are unable to experience that benefit of the GST under the benefit of GST from getting rid of tax on tax. All of you understood now? Now we can come to the PPT and understand what is written there. GST is a tax. It is a multi-point sales tax. Multi-point sales tax means that it is a sales tax on each point of sale. Multi-point sales tax. While purchasing iron for the car, sales tax is there. While purchasing a tire for the car, sales tax is there. While purchasing the plastic for the car, sales tax is there. With set off means refund. I told you that the 50,000 already the showroom or the manufacturer paid, and as a tax will be refunded to them with set off or the refund for the tax paid on purchase of input. Input means raw material. Whatever tax the manufacturer paid on purchasing input will be refunded to the manufacturer. Tax will be there at every point of sale. When somebody is selling to somebody is selling to manufacturing company, somebody is selling to retail, every point sales tax will be there. But whatever tax paid by manufacturer will be refunded to the manufacturer. Advantage, no cascading effect of taxation. The highest share in the tax collection in India is coming from GST at present. 28.5% is the tax collection coming from GST.